Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Japanese markets for now are down almost 0.4%.
The 40-day exponential moving average, which is 25,018. So 25,150 on the Nifty, 82,500 on the Sensex.
The main thing is for investors to have very moderate expectations from equities.
Historically, we have grown at a CAGR of about 24%.
It lists at a bit of a premium in comparison to what the IPO price is.
Bank Nifty is down, but not as much as Nifty is currently.
Revenue front, it's seeing a decline of 7% or growth of 4%.
The last 2 years, the share price has been going down. So now I was very insecure that we are a downward vertical spiral, you know.
The market was not expecting a deflation at all.
It's very close to that 25,000 mark. We'll have to see whether that important level is broken today or not.
Okay, that is the day so far, and it has been sideways from the word go. No real bounce or anything of that sort. From the lows, yeah, maybe a little bit, but otherwise, it's been down. Broader market is another story entirely. Mid and small cap indices are up between 0.5% and 0.6, 0.7%. So divergent kind of screen out there. Lots to talk about in the next 60 minutes. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues, Nigel and Reema. Guys, hi, afternoon.
Hi. We would have been a little better if it wasn't for the continued decline in IT stocks. The Nifty IT index is down 1.5%. Other than that, there are no big losers.
Well, that's right. You know, I think we're down close to around 80 to 100 points of majority of the trading session. But you will not still be too worried. You know, the lower levels to protect out. And as you all said, there are plenty of themes that are playing out. You had VIP is higher. You have, various other stocks. Z Entertainment is higher. Polycab is higher. So there are a lot of stocks, actually, that would be making your portfolio look quite good, though the Nifty is down 100 points.
Oh, absolutely. And, even the breadth of the market, I don't think it's that bad.
1:1.
I mean, 1,300
Almost
up
1:1,
and
yeah.
almost there. I mean, so not very bad. It's just the IT, as Reema said. The IT index is down for the second day running. Infy, TCS are down 1.5%, 2% respectively, and that's basically the Nifty look a little bad. But just a couple of points sideways since morning. The pockets which are doing well, and I mean, you've got to count them. Real estate is doing well. I looked at pharma, but also healthcare. Hospital companies are doing well. Capital markets is another area which seems to be doing quite nicely. So, we'll talk about each of these, some of them as we go along. IT, a loser for the second day in a row. And of course, straight away supports Nifty 25,018. I think we're almost there. We're trading just over it. That's the 40-day exponential moving average level we put out in the morning as well. The Nifty Bank is the 40-day for the Nifty Bank is 56,097. As it trades right now, the Nifty Bank is around or just under the 20-day moving average. Remember, the Nifty broke the 20-day on Friday. The Mag Nifty did not, but I think it is doing that today. It's not down a lot or anything. It's just down about 0.25%, but that's doing it for the Nifty in terms of the that important sort of short-term moving average.
Well, just a quick run-through of the price action in large cap IT. 1.5%, 2% gone on most of the heavyweights. So TCS, Infosys, HCL Tech, Wipro and Tech Mahindra all down more than 1% at LTI Mindtree. If you look at the ER&D companies, especially the ones which cater to, say, sectors like automotive, which have been hit, the question is, have they perhaps bottomed out in the near term? Look at the price action in Tata Elxsi or even at Tata Tech. Tata Tech reports numbers today. Tata Elxsi reported very weak numbers last week towards the end of the week, but those stocks are actually higher in trade. Tata Elxsi is now up close to about 1.5%, and Tata Tech too is managing a green tick. But in the mid-cap space, lots of big movers. You spoke about a few, but I think the stock of the day clearly is Ola Electric, 14% up.
Well, that's right. That's the big mover today. And even VIP, actually, the deal was announced at a sharp discount. The stock was down 5%. Now it's up 5% from the low. So that's seen a big recovery, actually. But let's focus on that name first up itself. In a confirmed news break, promoters of VIP Industries will sell 32% stake to consortium of Multiples PE and Mithun Sancheti at around 388 rupees a share. The management also joined us earlier today to discuss the sale. Mangalam joins in first up to tell us more about this deal. Mangalam.
Well, you know, in the morning I had said that because there is a discount to the current market price for VIP, the stock would open lower, but thereafter the street would start looking at possible turnaround. Yes, the stock had rallied about 75% in the preceding 3 months, suspecting a deal like this. But now that the deal has happened, those initial, sell-on news moves have happened. Now the street is betting on the longer-term perspective where over the last 5 years or so, if you look at VIP and look at some of the other competitors, VIP has massively underperformed. So with the prospect of the business turning around, can there be better days ahead or not is what the street seems to be betting on right now. The promoters of VIP sold 32% stake to multiples private equity and a clutch of other investors who include the likes of Mithun Sacheti, etc. And apart from that, because of this deal, there has been a mandatory open offer at 388 rupees per share as well for another 26%. Remember, we spoke with Dilip Piramal and he said that it was imminent that he had to sell this company to a private equity player because there was a management crisis in the company over the last 5 years. At the same time, the second generation was not interested in professionally running the business. More importantly, a private equity player would come in and focus on scale, creating value and profitability at a time when there has been a loss of market share and the overall competitive scenario has changed a fair amount. And the stock too, from its peak, is about 40% away. So he thought, why not now than another time later? At the same time, he owns about 20% in the company with the decision to pare it down to 8% over the next few years. And he offhand also did say that multiples intends to hold this business for the next 5 to 7 years. And typically PEs are looking for a multiple of investment anywhere between 2 to 3 times. So he's laid out threadbare what multiples intends to do and what VIP needs to do to change and relive its old glory days.
In the last 5 years, we have not been doing well. We've had a management, I would say, crisis in the last 2-3 years. And our market shares are going down. And the younger generation is not interested in the management. Of course, in India, there are some exceptions where even the 7th generation is doing well. So there was an absolute need, in my case, to have a change of ownership and management. So it is for the interest of the shareholders. I think we needed a change of management with change of ownership. You see, change of ownership, the party has skin in the game. And why then, private, as we are doing with the private equity player, is that the only aim of the private equity is to increase value. There is a clause that as 20%, I am still designated as a promoter of the company. So in a period of 5 years, not before 5 years, but after 5 years, I am required to bring down my stake to under 8%.
All right, that was Mr. Piramal then, giving us a rationale behind selling it and his plans as well with the stake going ahead. But let's get a technical check first on the stock and then, in fact, we'll get a fundamental view. Mitesh Thakkar is back with us. Mitesh, before we talk about the Nifty, what's the view on VIP? A stock that was 750 rupees or thereabouts, say a couple of years ago, 2 years ago, and then it went down to 250. At around 480, how's it looking?
So I think, Nigel, one, on the long-term charts, the correction is over. And getting past 460, 440 zone is a very positive sign. The first target is around 520. What I expect, what I'm looking at eventually is 560, 570 zones. So in the short to medium term, the trend is on the upside. So my idea is if somebody is holding the stock, just hold on. I think the stock is likely to head higher.
Okay. What about stocks and the index trade from here on?
See, on the index, I said that we've got into some kind of put spread, so there's vested interest. But yeah, the belief is that the view is slightly on the negative side. We might test about 24, 800, 850, 860 zones, and with that, shorting should be done on a pullback closer to about 25, 200, or make some put spreads, which is what could be a good trading strategy. On stock specific basis, I have one buy and one sell. Macrotech Developers Lora is a buy with the stock at about 1390. Look for a target of around 1360 here. And a sell on Mazgaon Dock with a stock at about 3160 for targets of 3040.
Got that. We'll come back to you, Mitesh, to get in some more trading ideas. For now, let's turn our attention to the big story that we're tracking, the BSNL and MTNL asset monetization drive. Ashmit is joining in with the details. Ashmit?
Well, we're beginning to get glimpses of what this asset monetization drive may look like. To begin with, a committee of secretaries had been formed. It was headed by the cabinet secretary. What we understand is that they've opened up a non-auction route for other government ministries, government departments and government agencies to acquire this land of BSNL, MTNL at market rates. This is the non-option route that has been contemplated. Under this route, interested departments, interested government organizations can express their interest on properties that they feel are lucrative for them, and then they can do so by going ahead and making a 2% earnest money deposit. But one thing is clear, that the decision that has been made makes it clear that this entire transaction, even if it happens will happen at arm's length between two government agencies. It will happen at the market rate. The market rate this decision was arrived at was very clear. How will this market rate be determined? Well, for assets below 10 crores, it will be MTNL, BSNL themselves who will assign a market value. For assets above 10 crore rupees, it will be the CPWD that will arrive at the market value. And for assets north of 100 crore rupees, in those cases, the National Land Monetization Corp will be the one deciding the market rate. And this will be the rate at which the transaction will be done. Again, interested government parties can move ahead. They can make a 2% earnest money deposit of this market value and then can proceed with this transaction. What is important, however, is that there's a caveat. The caveat is that there is only a 90-day window within which the government agencies will have a right of first refusal. If there is no response coming in from the central government agencies, then after the completion of that 90-day period, those assets will be available for even non-government entities to participate. So that is something that MTNL, BSNL will have to look at. A two-stage process. First stage, the central government agencies will have the ROFR, will have the first cut at the pie. Back to you.
Thank you very much for that. Stocks are excited. Pull up that MTNL up 7%. ITI, monetization of their land infrastructure will help them raise money, cut their losses, bring down their debt. So looking up for the stocks. Dipan Mehta is now joining in. Dipan, any thoughts on this monetization roadmap? First, it's going to be the central bank entities which will be given an option to buy the infrastructure and the surplus land that many of these telcos are sitting on. Should they have directly opened up to private sector? I mean, I'm sure these stocks like MTNL and IT are not on the buying radar, which is why I'm not directly asking you on that. But your thoughts on the process followed. And is this prequel to a potential entire sale, a privatization?
Yeah, good afternoon, Nima, and thank you for having me on your show. I think it's a good move, and it's a non-controversial move because the minute you start selling assets to the private sector, whichever route you apply is going to cause controversy in our country. So I think let them try this particular route. I think it's the first time that the government is trying to set up some process like this. And if it is successful, I think there are a lot of other public sector enterprises sitting on very rich real estate and other assets which can be monetized or used by other government departments or other PSUs. And only one needs to understand what is the real scope of value unlocking over here for MTNL and BSNL. And is it going to be significant? And also another aspect I think for MTNL should also consider is that is there going to be a merger with BSNL as well? Because that would make the entity more viable. And certainly the funds that they can get from there, they can invest in the business. And whatever happens, I think BSNL or a third player or a fourth player from the government side is always going to be a reality in the telecom industry.
Rima, you remember you had an MTNL connection? A phone?
Yes.
Yeah.
Remember your number?
I remember. 26406161.
I remember mine.
Discontinued.
Good old days, right? I mean, Deepan, what about you?
Yeah, I remember all my telephone numbers, office, home.
You still have one? You still have a connection?
Yeah, of course. We all have connections at home and office. It's still required.
MTNL one?
MTNL, yes. But it's tough to get it fixed if it gets spoiled. But, we need to have these MTNL lines because sometimes the range doesn't get picked up in the office or at home.
Do you remember that famous Jasbal Bhatti, back in the days used to come, right? There was a phone line flop show. with the lineman, the father trying to get his daughter married to a MTNL employee, I think the phone department employee. And I try to show it to my kids, and they had no idea because they've never seen landlines, and that's the entire generation gap, right?
Not only that, Prashant, they don't know what it was to get a landline in the house. I mean, I grew up in the 70s, 80s, where landlines were a rarity, and it took a lot to get a landline. There was waiting of 5-10 years also or so. So to go from there to getting a SIM in your house or office is like a long, long way from where we were.
Absolutely. It used to be PCOs, and I mean, all that has disappeared, right? I mean, technology marches on.
And I'll tell you one thing, Prashant, while we are at this thing, that in our office and me personally, we are using so much of AI that I don't know where it's all going to lead to 5 years from now. We may think the internet and browsing and a whole host of activities which we are doing just now may just become completely redundant. So that's one big change happening, a big disruption happening in the entire workspace. I won't say technology, but the way people are working and interacting and getting their tasks done. So I don't know who's going to benefit from it big time, apart from NVIDIA, of course. But certainly it's going to add a lot of efficiency to organizations.
So you don't need as many people, perhaps. And you're hearing that, right? I mean, anecdotally, instances, etc., across industries. And you're absolutely right, Deepan. When we talk about if it's going to change, increase productivity levels massively across the board, I mean, AI, etc., have you thought about where it kind of shows up in a big way as far as listed companies go here in India? IT is one, but that's, we spoke with TCS, for example, on Friday. They said productivity goes up, but they don't think pricing will get impacted. So they think they're not saying AI is deflationary. But anywhere else, you think it'll show up in a big way?
See, Prashant, I compare AI to what happened when internet suddenly started picking up, and we had so much of online transactions, online maintenance of accounts, online services, and we couldn't find a single winner over there per se, but all the companies benefited through improved productivity. And I think something similar is going to happen in AI. All that we can say is that the companies setting up data centers and manufacturing these servers, I think they're going to be the big winners over there. And one company, of course, we've spoken about E2E network, in which L&T has taken a stake, is bang in the middle of this particular investment theme. And of course, it's very expensive per se. But other than that, I think, if you want to buy a solid company bang in the middle of this AI investment theme, listed on the Bombay Stock Exchange or NSE, I think that's very difficult. Of course, there are bits and pieces being done by a lot of players, but no real single company like they have in US like NVIDIA, which is a complete play on AI.
But since AI is helping everyone across sectors do more with less, hiring is going to get impacted, whether it's for finance companies or even FMCG, etc. So is there a risk to, say, a company like InfoEdge, the Naukri business, or any of the staffing business at the lower end?
See, I don't think so. I think, empirically, we are seeing in our business, and when I speak to other entrepreneurs, there's a huge shortage of labor, in fact. I mean, look at what L&T is saying, what Kalpataru is saying, KEC is saying. There's a huge demand for skilled labor. Point number one. Point number two also, other than that also, I think across the board, whether it is in sales, marketing, or manufacturing, even back office jobs, there's a lot of demand in India. Companies are expanding. So I'm not too much concerned about job losses in India, because on the whole, the economy is expanding and the companies are expanding. There are so many startups also taking place within India. And so I'm not too much concerned about job losses at any particular corporate level. I think in India, who has announced job cuts because of AI? Nobody. And nobody had announced job cuts ever in the past in India on any count per se. So I'm not too much worried about job cuts in the Indian context. And I'm not too much worried about that impacting InfoEdge business as well. So I would rule that out.
Okay.
All right. Got that. Well, let's talk about not job losses, but a company that's been reporting losses, but promising better times ahead. Ola Electric. The numbers were announced some time back, but guidance was very, very strong. Sudarshan joins in to break it down for us. Sud.
So it's an electric move that shares of Ola Electric are seeing. So ahead of the earnings, stock was at 52-week low, down 53% in 2025 and down more than 75% from the record high the stock had hit in August of 2024. So what has worked for the company? First, earnings on a sequential basis have seen an improvement. And second, guidance that company has provided for FY26 is looking healthy if you take a look for the first time. But first, talking about the numbers, losses have narrowed. If you look at a sequential basis in Q1 FY26, net loss has come in at rupees 428 crore against rupees 870 crore loss that company had reported in Q4 of FY25. Similar trend was seen in revenue. It has seen an improvement on a sequential basis. In Q1 of FY26, revenue has come in at rupees 828 crore against rupees 611 crore. But the biggest positive that was seen was in gross margin. In Q1 of FY26, gross margin has come in at 25.8% and it has improved from 13.7% Q4 of FY25. And now, by the end of FY26, company is saying that it might see gross margin including PLI benefits in the range of 35 to 40%. If it really achieves, it would be an improvement up to 1,500 basis points by the end of FY26. Some of the concerns that company has raised, like all the other auto OEMs, it's regarding rare earth magnet. It's saying that in the long term, if there is an issue regarding availability of rare earth magnet, it might create an issue, but in the short term, company remains well covered. Lastly, talk about the guidance on the revenue front. Company is saying that in FY26, revenue is likely to be in the range of rupees 4,200 to 4,700 crore. That would be decline up to 7% or growth of more than 4%. On the volume front, it's saying that in FY26, volumes may be in the range of 3.25 to 3.75 lakh units, and that would be against 3.59 lakh units that company had reported in FY25. Apart from these guidance, company has also said that from Q2, auto segment business will turn EBITDA positive. So more than earnings, what has worked for the stock is the guidance that company has provided for FY26.
Okay, all right. So thanks a lot for that. 15% higher. Stock that, post-listing, I remember dancing away to 140 rupees. At 40 rupees, it's seen a bounce. Deepan, will you buy the stock on this promise that things are going to turn around, growth is going to come back, profitability is going to be the focus at around this 45 rupees? All the bad news in the price, or you rather stay away?
No, I think, Nigel, I would rather stay away because, we have a conservative approach to investing per se. And, look at the volume growth, that's the most disappointing part. I think company like Ola Electric, you expect 15-20% type of volume growth, but that's not coming through. And competition also is intensifying. It has lost its market share as well. Of course, it has done great work on cutting down its expenses. But for the company to grow and for us to get interested, you need that 15-20% type of volume growth. And I don't know whether that's going to really happen in the near future. So sure, I think the management certainly has given a very positive commentary and that's taken the stock price higher. But apart from that, I think, let's just wait and watch how this year plays out. And most important indicator to watch is market share and volume growth.
Okay, so what would you buy then from autos if you had to buy a stock?
You always ask me this question and there's only one answer. Eicher Motors, I think, and I think it'll benefit from monsoon as well. And the second company is Mahindra and Mahindra. I think these are the two companies which are gaining market share, which have got a kind of Eicher Motors not impacted by EV per se, and M&M has a very solid EV strategy. So these are the two companies we are riding on as far as auto sector is concerned. Usual disclosure, we and our clients are invested.
Got it. Okay, all right. Was just wondering whether you're still loyal to the Royal Enfield and you're confirming that. So Eicher and Mahindra. Got that.
There was also an article in the paper that some of the smaller EV players have been wiped down because they have violated some of the FAME 2 subsidies. So we're talking about names like Okinawa Autotech, Greaves Electric. So I guess that is also helping consolidate market share with some of the larger players like TVS, Bajaj and Ola in terms of volumes.
All right. Interesting point out there. Let's shift focus then to the pharma pack. Ekta joins us to tell us why some of these stocks are buzzing today. Ekta?
Thanks. I'll start with Divi's, which is in focus because MSN, the pharma company, has won a patent litigation with regards to Novartis's cardiac drug Entresto, which clears the path for a generic launch of this particular drug in the US market in this month itself. Now, Entresto API is expected to be the largest product in Divi's innovator custom synthesis portfolio and estimated to contribute as much as 40% of their CS revenue and 20% of the overall company revenue. Sun Pharma, Morgan Stanley has written on Sun, overweight, target price of 1960. It's their preferred pick. Strength in the specialty pipeline and chronic-focused India business is something they like, and a robust balance sheet. Wockhardt has exited the US generics business. They will now focus on the new antibiotic drug discovery segment and biologics portfolio in insulin. Glenmark has received a warning letter from the US FDA for its Indore facility, which was inspected in Feb, and they have an OAI status, official action indicated status, since May of this year. Global Health, there was a petition filed before the Delhi High Court by the Greater Kailash Residents Associations and others. This seeks a stay on the construction of a proposed 400-bed multi-speciality hospital in New Delhi, and it was being developed by Global Health as well as DLF. It was a joint venture. The court, however, has not granted us any stay or interim relief with respect to the construction activities.
Thank you very much for that. Earlier today, we spoke with the chairman of the company, Habil Khorakiwala, after the company, as Ekta said, announced its exit from the US generics business. Listen in.
As far as the pharma generic is concerned, we are exiting and we will not have even the third party presence. But however, as far as our new drug is concerned or biologicals are concerned, we would be definitely there in the US market in time to come. US, as far as the revenue is concerned, it was hardly 2-3% of our revenue. So it hardly makes any impact whatsoever. As far as the margins are concerned, I think our numbers will improve because we have been incurring losses for the last several years. In fact, we lost about $8 million last year. So partly it will be made up in this year. We would be on the track because we are introducing our new drugs in the Indian market. And after initial first year, it would be significant margin improvement. Additionally, we would be focusing on our biogenerics, that is diabetic portfolio of insulin and newer insulins. And all this put together will certainly, we would achieve this kind of 18-20% market, margins over next few years. As far as marketing in the US is concerned and other markets are concerned, some of the markets we would be certainly looking for out-licensing, and that will depend from market to market.
Let's go across to Deepan. Deepan, what do you like from the pharma pack?
Yeah, I think that, of course, we have this threat about tariffs by Trump, but the entire CDMO space is where we are focused on. Again, disclosures over here. Companies like OneSource, there is Cohance, which was earlier Suven merged with another company. And then there is Dishman, I think DuJet also. I think these are the companies, I think, which have great potential. And whatever the outcome of the Trump tariffs, I don't think the CDMO business is going to get impacted. The China Plus One strategy is clearly playing out extremely well over here. And all of these companies are seeing a sharp increase in RFQs. So very positive on the entire space. And yes, Newland Lab also you can add to the list. These are the companies I think that we need to focus on. And Divi's Lab especially, I think, whenever there's bad news and you buy a decline, a few years later, 2-3 years later, you find the stock has again created a new high and recovered lost ground. So I wouldn't be too bearish on Divi's Lab just on account of this one particular development.
Okay, all right, Deepan, thanks a lot for joining in and giving us those views. By the way, as we're having that chat, take a look at the Nifty. It's cut its losses, was down 120 points. It's the 40-50 point recovery that we've seen. Grasim, HDFC Life, SBI Life, they have seen a good recovery. Throw in there even IndusInd Bank. Solid recovery was what we're seeing on that one. And in fact, from the broader markets, one stock that's catching an eye is Tata Tech. Remember, it's been a bit of an underperformer. I think results are due. And that one from the day's low has suddenly seen a sharp spike up on Tata Tech. Well, we'll slip into a short break. On the other side, we have Jitendra Gohel from Kotak Alternate Managers. He's waiting for us.
Welcome back. Jitendra Gohil is now joining us. He's Chief Investment Strategist at Kotak Alternate Managers. Markets, as Nigel pointed out, recovering from the day's low. And we are at about almost 25,100. Jitendra, welcome to the program. Thanks for joining us. Last you were on the program, Jitendra, you were talking about low-cost housing as an idea. Jitendra, because financials broadly is still one pick because RBI is wants to spur growth, kickstart another credit cycle, etc. Lots of NBFCs have done quite well, beaten down NBFCs have done quite well. Housing finance and low-cost housing finance, not so much. First of all, are you talking about real estate companies or finance companies in this segment, low-cost housing?
Hey, hi. Thank you for inviting me on your show. See, what we think about low-cost housing, first is the valuation is reasonable as of now. And what we feel is that the interest rates are going to fall further in India. And most of these NBFCs are in a much, much better place. Even some of these small finance banks who are catering to low-cost housing, probably there the growth rate is going to remain robust. And that's what we feel that the segment is looking attractive from a 2 to 3 year perspective. Also, we have to understand the rural recovery, right? So, although the sowing season has been pretty good so far, 16% YOY growth, monsoon has been pretty solid. So, from interest rates perspective, from rural recovery perspective, and we are also bullish on tier 2, tier 3 cities, the kind of growth that these cities are experiencing. So, overall, if I see the landscape, I feel that from a financial market, we are overall bullish. And within the financials, we think that the NBFCs and small finance banks, which are catering to the low-cost housing space, will do much better in the next 2 to 3 years.
Jitendra, what have you been adding to your portfolio right now?
Unfortunately, we cannot disclose the names, but from a sector perspective, I think all these leading, good quality small finance banks and NBFCs that we are looking at to add.
Okay. Other than that, in this bucket in the financial space, anything else that you all have been liking off late?
Yeah, so we continue to like entire financial space. We are overweight currently. So mostly some of the mid-tier banks that we discussed last time as well, that we like mid-tier banks, we like housing finance, small finance banks. And also we have to look at the liability and the the loan franchise. For example, the banks and NBFCs where their lending is mostly fixed rate based, while the borrowings are floating. So I think those kind of banks and NBFCs we prefer at this point of time. And we feel that interest rates are going to fall further. They are going to come out with a capital raise also. So the health of the banking system is very, very strong. So we think that this is a very sweet spot right now we are sitting on, where we think the loan growth has been pretty volatile, but it's been slowing down. From going forward in the second half, we think there could be a good chance that we see some pickup in loan growth, because CRR cut will start from September onwards and interest rate will fall further. So all these triggers are giving us very confident view on the sector.
Okay. All right. Hi, Jitendra. Good to see you. When, tech, that seems to be in a bit of a tizzy. We had TCS's numbers that came out and they're very uninspiring. So we need to keep in mind that the global backdrop itself is very uncertain. And some of these are very, very well-run, good quality, clean balance sheet companies that could throw up a lot of cash. And, then the cash flow as a percentage of the market cap looks very, very good. What's your view on it? Some of these stocks, case in point being a TCS, has pulled back 20% from the recent peak. How are you positioned on tech? What do you like, large caps or the mid cap names?
Nigel, see, here we are a little bit cautious, and clearly we are mentioning that we like pharma or IT in the defensive space. Large cap IT, I think balance sheet is strong, margin profile is very good, but valuation obviously is stretched, and we think that there is ample opportunity outside this tech space. Some of the mid cap IT companies which have been beaten down, from a value perspective, we are buying a bit, but overall sector-wise, we think that one should remain a little bit underweight here, especially on the large cap IT names. Some exposure is warranted. Obviously, these companies are bellwethers, and once the global economy starts to recover, and large part of the slowdown is already priced in. So it's not that we are experiencing a very sharp correction or anything, but we think that the sector might go in consolidation, probably might underperform the Nifty because banking overweight, underweight on IT, that's the call that we are taking from a house view perspective.
Point taken, Jitendra. We'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. We'll take a quick commercial break here. We'll come back and get you, some more opinion. Short-term trading ideas coming up as well. What to buy or sell today for a reverse trade tomorrow. Stay with us.
Welcome back. You're watching Closing Bell. About 30 minutes or less than 30 minutes to go now. It's been a subdued trading session for the benchmark indices. The Nifty's down 70 points, but off from the session lows, particularly in the last 20 minutes. There has been a pullback, 2580 on the Nifty Midcaps, continuing to gain traction, 400 points up now. Mitesh is back with us for a few BTST calls for a reverse trade tomorrow. Mitesh?
There's some recovery in the index from lower levels, but I'm still not convinced about taking a long trade on the index. So we'll maintain that aggressive bias with put option spreads. On the stock side, though, Oil India and ONGC look good, so I've chosen ONGC as a BTST kind of a trade. Keep a stop below levels of 242 here. Look for a target of around 247.5 to 48 for tomorrow. And the other stock, which I have. The other stock which I have on my radar, that's Policy Bazaar, which I would recommend taking on BTST with the stop below 1820 for targets of 1850.
Okay, Policy Bazaar, 1850 targets, stop at about 1820 or so. Thank you very much, Mitesh, for that. Now, cable and wire sector is in focus post JM Financial note. Upasana is here with what JM is saying. Upasana, take us through it.
Well, JM Financial is bullish on cables and wires players. Now, it projects that the sector is projected to continue its upward trajectory with a CAGR estimated at 12% over FY25 to FY28 is what the brokerage has highlighted. It expects exports to be a key growth driver for these players going ahead, and it believes that the India's share in global cables and wires exports has inched up significantly. Now, Indian players are augmenting their capacities and capabilities and has improved their global positioning in terms of their sectors. Now, lastly, it believes that unlike paints, the entry of new entrants is unlikely to disrupt given the lower capex and also a fragmented setup. It has also highlighted that it expects new entrants to have a greater impact on smaller, unorganized industry players as compared to the industry leaders. Hence, on the back of this, it has initiated a coverage on KEI Industries with a target price of around 4,500 per share, and it has also re-initiated coverage on RR Kabel with a target price of nearly about 1,640 per share. And we can see both these stocks surging in trade today on the back of this positive news.
Thank you very much for that. But back to talking about IT. So, this week we've got 10 Nifty companies reporting numbers. Out of that, 3 of them are the IT majors. HCL Tech today, Tech Mahindra on Wednesday, and Wipro will be Thursday post-market hours. TCS already reported their numbers last week. It was a disappointing set. Minus 3.3% was the revenue drop. And Infosys is next week, the 23rd. Now, for all the 3 companies reporting numbers this time, we are expecting this would be the second consecutive quarter of a revenue decline. For HCL Tech, minus 1.1, Tech Mahindra, minus 0.7, Wipro would be approximately minus 2%. So the question is that since this would be the second consecutive quarter of a revenue drop, how deep is the demand pain? Does it extend into Q2? Can there be even a modest recovery in the second half of the year? TCS already said that on a consolidated basis, it's difficult for FY26 growth to be better than FY25. Though if you strip out the BSNL deal, they do expect FY26 to be better. But look at HCL Tech's guidance. They're talking about a 2 to 5% revenue growth for this year, unless revised higher later in the evening. 2 to 5% would compare with 4.7% last year. Now, already Q1 it's been a weak start, especially for TCS. It was worse than expected. So we're going to watch that, whether the pain is running deeper than what was earlier anticipated, and how long does it extend. Now, stocks are about 20 to 30% away from their 52-week highs. TCS down 30. For Infosys, HCL Tech and Wipro, it's a correction of about 20% from the recent highs.
Okay, all right. Thanks a lot for that, Reema. Well, let's get in Sudeep Bandyopadhyay, Group Chairman, Indie Trade Capital. Hi, Sudeep. Good to see you, Ben. What's your view on a couple of these Tata Group names that actually have been big underperformers and will be delivering their numbers? Tata Technologies, Tejas Networks, both of them come out with their numbers. We know these companies are good. However, in the near term, there are some headwinds, and they've come off considerably from the top. Your view?
Well, Nigel, I think you are absolutely right. The headwinds are pretty strong. And look what's happening in the automobile industry. There is significant set of challenges which these companies are facing due to the slowdown in the automobile industry. So as far as, particularly these companies are concerned, at this stage, I would say it's better to hold back, not try to, buy at levels where it have reached. It is significantly corrected, but look, they're still not cheap. If you look at the multiples and all that, they're still, aggressively positioned. So some more correction is possible, and it will have to wait for recovery in the related industry before they can show signs of recovery. So my advice will be to wait and watch.
All right, that's on Tata Tech. On Tejas Network, any view?
Well, I think, there are interesting things happening and there are opportunities, but I think the completion of the existing contract or exhaustion of the existing contracts, domestic contract, has led to a bit of a challenge as far as the order book is concerned. So I will again here also wait a bit and see how things move going forward in terms of their order.
Any view on the newly listed company, TFS, that listed today, Travel Food Services? The company looks pretty solid, in terms of growth, 20%, 25% to 30% growth. Margins are pretty okay. And profit margin, which the management has reportedly, said that 20 to 22% is what they're looking at. It trades at less than 30 times if we look at it on a forward basis. What is your view on the company? The fear is that, a dream folks kind of situation can play out. though the management told us that they are partnering with Adani and GMR. So they don't believe that that's going to be possible. Your take?
I think the entire issue got to an extent overshadowed by the Dreamfolks episode, and there were a lot of concerns regarding what happened to Dreamfolks wouldn't happen to them, and I think market is also waiting for that to be displayed over the next few months and quarters. So that's probably the reason why it didn't get a premium, didn't get the kind of excitement it would have otherwise deserved. So yes, I agree with you. It's a strong business, and they're expanding. The opportunities are significant with two new airports coming in the outskirts of Mumbai and Delhi. I think F&B is a good business to be in. And if they can continue working in partnership with the major airport operators, there should not be any risk to their business. So I generally kind of veering towards the view that probably it's worthwhile looking at, considering the multiples are not too high. But yes, the Dreamfolks related uncertainty still hangs over this entire sector.
Sudeep, what about a Safari? Now, Safari has been gaining market share at the expense of VIP for a while now. In fact, for many, many years now. The 10-year revenue growth rate for Safari was 24%, 3 times that of VIP, the 10-year revenue CAGR. Look at the stock price. In 10 years, Safari is up more than 1,000%, while a VIP is up 80%. But now there is a change of guard at VIP. So, and plus, we know the increasing competitive intensity due to these D2C players like a Mokobara, etc. And there's so many others. Do you think Safari's dominance could be challenged, and people would look at VIP where valuations are a little more attractive vis-a-vis a Safari, which has had a fantastic run so far?
Absolutely, Rima. I think I do agree with that logic, and I think it's time to look at VIP. What they lacked was the management and the promoter commitment. Promoter wanted to exit for quite some time, and that was getting reflected in the performance of the company. The potential for VIP is significant. Look, the Bangladesh plant, when they set it up and the way it had come up was a absolutely fantastic opportunity for them to get into the international market and do great revenue from international market, where the margins are also more attractive. Unfortunately, because of the local challenges and promoter and management related uncertainties, they couldn't capitalize on the Bangladesh factory. But I think with the new management, new promoter coming in, and the focus being back in the business, they should start doing very well. And yes, absolutely, that's probably the reason we see VIP price going up today in the market. The market will like to believe in VIP once again. And of course, Safari is at a very, very high multiple. So comparatively, and looking at the scenario as it prevails today, I think VIP will be a better buy.
Interesting times, actually, get that point. Valuation-wise, if you look at it on a price, to sales to price as well, market cap to sales, definitely VIP is better placed on that front because Safari's got very expensive. But just one view in terms of the feedback that I've got is that there was a lot of price cutting, a lot of discounts that were given. So with a new promoter coming in for VIP, then hopefully that stops. That could be actually a positive for the industry on the whole. But let's see how that goes. For the time being, VIP seen a sharp recovery, and it has outperformed Safari, at least in the last 6 months. Over a longer term, obviously, Safari has done much better. Well, stay with us, Sudeep. For the time being, let's get in some market opinion. Earlier today, we spoke to Rahul Chadda, founder and chief investment officer at Shikara Investment Management. Asked him about his view on tariffs, the change in Fed governor, and also whether he sees value in the Indian markets. Let's take that break. And while we do that, hear out Rahul.
Yeah, so our beliefs mean tariffs are going to settle somewhere between 15 to 20%. There is going to be a lot of rhetoric around it, a lot of noise around it. The idea here is to induce, from a US perspective, other trading partners to agree to some of these conditions of better access for US companies and US products, etc. So markets seen this in the past, and which is why they're very calm about it. I think there may be a correction or a significant pullback in markets if actually such high levels, 30-35% of tariffs get implemented and US starts collecting it. That is the risk, if you ask me, that the yields kind of go out of control and touch 5%. If you ask me the risk for the markets, that's the risk of the market. See, right now what we've had is we've had the Treasury Secretary Scott Bessent, who's played the role of a mature adult here and calmed the markets on that. But look, if the government or the administration here takes a whimsical way to change the guard or the chairman at Fed, I think that would be taken negatively by the bond markets, and obviously equity markets would also react to that. As the economy kind of bottoms and grows from here, banks are the best proxies. We've played it through the large cap banks, which are steady compounding machines. At the same time, we would like something like a AU Bank, etc., which has done well over last 6 months. So select mid-cap banks. So we're not against cap banks, so it's select mid-cap banks, which are good franchises, good risk management, etc., something one has liked. This quarter may be a bit soft for banks as some of these rate cuts impact the NIMs on the, more importantly, impacting the asset yields, etc. But from a medium-term perspective, look, banks are the best way to play the economic recovery.
Welcome back. About 7 minutes left to wrap up today's trading session. Some of the big mid-cap movers, since the broader markets have been outperforming. Ola Electric has further moved up now. Now it's up close to about 20-odd%. And then you've got a Jayaprakash Associate, Jaiswal, Neko, some of these stocks, a BSC, Paytm, a Bank of Maharashtra also has turned back into the green. And Kryzac, which had a fantastic listing last week, today has moderated a tad bit. That said, the stock is still significantly above its issue price. In conversation with Sudeep, Ola Electric still off from its issue price. It's almost 50% lower, compared to its recent 52-week highs. But is it a buy now, given the guidance and the improvement that we're seeing sequentially?
Not really. I think there are still too many issues which is plaguing the company as well as the industry. So I'll wait and watch. They also have in the process of this entire new battery plant, which consumes huge amount of capital, and there is a drag on the overall performance because of that. At one point of time, that probably would have made tremendous sense. But today, the way the prices have come down globally, I'm not sure whether it does make sense, at least in the short to medium term. One doesn't know what's going to happen in the long term. That's one. And the other point is they have still too many issues in terms of servicing and after sales issues which they need to resolve. They have definitely lost the market leadership. They are number 3. And the numbers which they're selling on a monthly basis is nothing great at this stage. There will be a bit more consolidation because the smaller players are losing out the FAME subsidy, and they are, they are going out of business. So some amount of market share, some amount of numbers at least will come back to Ola. Probably they will show a little bit of improved turnover and turnover for next few quarters. But I think to say that the company is out of woods and one can go and buy, I think it's a little too premature. So wait and watch would be the right strategy here.
All right, Sudeep, I'm not sure whether you track these other names in the broader markets. Genus Power, the stock has just moved up. We know that smart meters has a big potential. The other one is Orient Pro as well. I'm just looking at a couple of these names. In the last 30 minutes, both of them have moved up. Now, just some of these stocks have corrected 30-35% and then pulled back. So they're still a far cry away from the highs that we saw in the month of December around that time. Any view on either of these two names?
Well, Genus Power smart meter is something which is going to happen. It's a matter of time before the entire country gets covered by smart meters. So the companies which are into that space will definitely have significant opportunities. So Genus Power is one of those, and I'm sure they will have the opportunities. Of course, at current level also the valuation is not cheap. It is reasonably valued. So if somebody has a slightly long-term horizon in mind, at least a year, I think they can look at Genus Power at current levels.
This Landmark Cars, have you looked at the company? Today there is a BNK initiation on the report, and I think they're talking about significant upside from here on, close to about a 60% upside from current levels. And the key rationale is that the company's revenue growth rate, pro forma, over the last 2 years was 11%, which is 2x that of the Indian passenger vehicle sales, where the CAGR was about 5%. And that stock is up nearly 7-8%. Is this a stock that you like or you've tracked?
Well, I think, we have been looking at this stock for quite some time, but somehow we have refrained from recommending this. I think overall the sector is under pressure, that is the automobile sector, particularly passenger vehicles. And we believe that some of that pressure will eventually come to these, these companies which retail passenger vehicles. So we, at this stage, considering what's happening in the overall automobile scenario, we will probably wait. Honestly, I have not seen this report, so I won't be able to comment on the specifics of the report.
Okay, all right. Sudeep, any view on some of these metal-related names? Hindalco, it was higher in the morning. That's lost its way a little bit. Vedanta, I think you were fairly positive on the prospects. We had that Viceroy report that came last week. And actually, those that bought on that dip are making money because the stock has outperformed from there. Your view on any of these names from the Ferris Pack, silver play as well, Hindustan Zinc is out there. That's holding firm after seeing a very sharp correction from the peak. Your take?
Well, I'm positive on both Hindustan Zinc and Vedanta, and you're absolutely right. Vedanta have been positive for some time. There are a whole lot of allegations before even Viceroy, and there were a lot of stuff being talked about. But if leave aside that, the facts on ground are very strong now. As far as Vedanta is concerned, pretty much all its verticals are doing very well. The demand for metals, particularly the commodities it is involved in, globally is good. And of course, on top of that, the demerger is a reality. Whether it happens in September or December, we can keep debating, but the fact is it's going to happen, which definitely going forward will unlock significant value. At some point of time, there will be, one of the companies may get sold, and which again will unlock value. So Vedanta, even at current level, does look good. Hindustan Zinc, obvious reasons, fantastic performance. The demand for zinc going up. They are putting up incremental capacity, and silver is an icing on the cake, which is in great demand today. And the valuation and price of silver is continuously going up. The expansion which Hindustan Zinc is doing currently is also going to definitely help them going forward from a long-term perspective. So Hindustan Zinc definitely can be looked at. So can Vedanta.
Got it. Okay. All right. Thanks for that, Sudeep. Stay with us. One stock that in the last few minutes has perked up is Bharti Airtel. If you pull up the intraday chart, it was in the red, I recall, and managing to end in the green, but the intraday chart will tell you suddenly we got a bit of a spike towards the end.
Last week, Bharti Airtel underperformed, and there was a UBS note. I think you can just pull up last week's chart. UBS downgraded Bharti, and Bharti was a consensus buy across, most of the brokerages. There you have it. In the last 7 days, it's corrected, and the key reason is they said, one, it's possibly priced to perfection, and two, everyone's watching out for tariff hikes. That's going to be the trigger. But don't rule out the possibility that this tariff hike could be delayed.
Yeah.
It's not so easy to hike tariffs in a country like India. So that's why UBS had downgraded it. So I think the stock is just reversing last week's underperformance.
Okay, all right. Well, time to wind down the markets then. In today's trading session, you had Eternal, that was one of the top gainers on the Nifty. Big move is what we saw out there. But otherwise, you had stocks like Hindalco that are a little bit under the weather from the Nifty path. The Nifty goes home with a cut of around 60 points. The good news was that the Nifty Bank managed to fight back. That ended around the even-Stevens line. And the big outperformance came in from the broader market. Stock of the day was VIP. That big announcement was that was long awaited. The deal got done. Mr. Piramal finally sold 32% stake in the company. The street believes the way ahead is going to be far better. So that stock was up close to around 5.5% in today's trading session.
Okay, IT firmly lower ahead of big numbers later this week. So Tech Mahindra, Wipro, Infosys, HCL Tech, all down between 1.5% to 1%. Bajaj Finance, Asian Paints, L&T, Eicher Motors, Tata Motors. These were some of the notable drags in today's trading session. One other big mover outside of the index was Ola Electric. By the end of it, locked in an upper circuit of about 20%. Good close for the mid-cap index and the small-cap index, which was up nearly 1%. Don't go anywhere. We're calling time on closing bell, but on the other side is Markets Forward. We'll prep you up for tomorrow.